Hello and welcome to Layer 1. My name is Kelvin Sparks and I'm joined by my co-hosts for today, Stephen Gates, the co-founder of Hypha, and John Wu, president of Ava Labs. I'm excited to introduce our guest for today, Anthony Scaramucci, chair of the advisory board for AVAX One Technologies, that's NASDAQ ticker AVX, and founder of Skybridge Capital. Welcome to the show. How are we all doing?
All right. Thanks for having us.
Good to be here, Kelvin. Thank you.
Before we begin, Layer 1 is a podcast focused on the intersection of crypto and the real world, and it's brought to you in collaboration with Avalanche. Nothing we say on this podcast is investment or financial advice. Make sure to always do your own research. And today's episode, we'll be talking about crypto cycles. I comedically titled this podcast, What Part of the Cycle Is This? But before we dive in, I want to hand it off to John, who has some personal anecdotes given his relationship with Anthony. John, please.
So thank you very much, Kelvin. You know, when I found out that Anthony was coming on this podcast, I jumped at the opportunity to be a co-host and be part of it. I've known Anthony for some time. We both used to be in traditional finance, but I've really gotten to know him better in the world of blockchain and crypto. I've had many substantive conversations with him. I mean, I think his record speaks for itself. You can Google his background, whether it's his early days at Goldman Sachs to buying and starting companies and selling it in the wealth management business, to Skybridge, to Salt, to his, expertise in all of crypto. But he's also basically an author of like 6 books. He's got like 3 podcasts. He's actually even had political connections where he was actually a director of communications in the administration for some time. It's like
you're not going to mention I got fired, Wu. You're going to leave that out?
I was going to let you say that, but my point was, having these
substantive starting out. Hey, Stephen, this is a diplomatic podcast. Did you not know that?
This is a very diplomatic podcast.
Yes. I'm sensing it.
But that all goes to the point. Like, you and I have a lot of real conversations, and it was very personal. And the stuff you read, obviously decorated on the resume. But what people don't realize, and if I can describe what I think of you, is everyone just looks at the resume and thinks it's all up and to the right. But you are actually very resilient, super well-read, a student of history, and very well-spoken, obviously, an author. But I think you're more like a Renaissance man. And I think there are things that you value in life, the things that we've talked about.
Can we make this podcast 3 hours, Kelvin? I mean, this is so far it's starting.
But it's all true. It's all true.
All right.
And I want to point this out.
As my 12-year-old would say, man, Dad, John Wu is glazing you, man. He's glazing you. All right, keep going.
He is a loyalist. I've met his teammates at Skybridge, and some of these guys go way back to law school. So if you're good to Anthony, he is good to you. That's another thing that I've picked up over
my
the years.
2 partners are my section mates in law school 40 years ago. My chief administrative officer I met at Goldman in 1991. She's still with me 34 years later. CFO 20 years. My driver, unfortunately for the son of a bitch, I drove him into the ground, so he had to retire. But I got a new driver, but he was with me since 1996, retired in 2024.
Wow.
But I think it's important to keep relationships, and I think it's important that people are doing a good job. Take everybody with you, But
I want to give one quote from someone that I won't mention a specific person. I won't mention a specific person, but it's important to point this out. He works with you now at Skybridge, and he basically said, listen, Anthony had no reason whatsoever to hire me except for the fact that he's known me for a long time. He knows I'm good, but I knew nothing about blockchain or crypto. And he took a chance on me because I'm his friend and he knows I'm good and I am forever loyal and I will always go to the extra mile for him because of that. That's the kind of person Anthony is and the people around him are. So with that, that's my background and that's my
obviously Kelvin and Stephen, he hasn't talked to some of my arch nemesis journalists that anytime I blow a fart and the wind goes in the wrong direction, they write a financial obituary, or when I was getting decapitated at the White House and being called a Jersey Shore cast member by Bill Maher, and I think I was called Tony Soprano on the Potomac by Stephen Colbert. Wu's leaving all of that out, which I very much so appreciate. But I'm going to take you, before we get to the current cycle, I'm going to take the last cycle where I was literally on my knees, John, and I had I'm in Abu Dhabi right now. I think it's important to tell this part of the story. I took Sam with me. Sam Bankman-Fried, 3 short years ago. Sam Bankman-Fried, 3 short years ago, was with me in Abu Dhabi, and I took him to the palace to meet the president. I took him to meet MBZ, who's a friend, and we sat in the palace for an hour, talked politics, crypto, all other things, and they were interested. I had dinner with his team from Mubadala here at the Four Seasons Hotel in the basement, Cafe Milano, and they were coming, guys. They were coming on the Monday before Thanksgiving to the Bahamas to do due diligence on FTX. Okay, and 8 days after the meeting here in Abu Dhabi, Sam declared bankruptcy. He was arrested 14 days after that meeting, and I got lit up like a Christmas tree all over the place. And I'm going to tell you 2 stories about this. They're very important, okay? Story number 1, I couldn't believe it. So I actually took a JetBlue flight down to the Bahamas, met with Sam and his father on the 8th of November. I had to look him in the face because it wasn't just me. There were venture capitalists, sovereign wealth funds, but I couldn't believe it. And then the other story is the president of Abu Dhabi called me and he says, "How are you doing?" Number 1, I didn't have the balls to call him. I was embarrassed. So that's a big lesson for people. Don't do that. Something's going wrong, pick up the phone and call somebody. I didn't have the balls to do it, but you should try to at least muster them. But number 2, I want you to think about real leadership. I had a 20-plus year relationship with him. I've got a great relationship with a lot of people in the government here, and they were more concerned about me and less concerned about the embarrassment I caused by bringing the guy to the palace. I just think it's an important thing to talk about because that's real leadership, you know. So I've had some great ups in this business, there's no question. Got into Bitcoin in 2020. We've held our position. So you guys know if our average cost is 20,000, it's actually 17 and change. You know, we're 4.7 to 1 on Bitcoin over the 5-year period of time. If people stay with us, they're very, very happy. Are they less happy, down 30%? Sure. But you have to step back and zoom back and look at the whole thing. Avalanche, I think our entry points are right about where we are right now because we've averaged in over a series of tranches. I think it's one of the best technologies out there. My next book in the space is going to be about Avalanche. I just wrote one about Solana. I'm not, as John knows, I'm a multi-chain sort of theorist. I believe there's going to be a huge sleeve of opportunity for Avalanche, and I believe that there'll be lots of market share. But I think this is a lot like the cloud. AWS has a cloud, Oracle has a cloud, Microsoft has a cloud. I don't see one thing eating up the entire space. Now, if you guys think I'm wrong about that, push back. But when I look at the technical properties of Avalanche, it's the most versatile. And as I've said to John prior, I mean, it's literally like a Swiss Army knife. You can do so many different things with Avalanche. And it offers something that old farts like me like, which is customization. Because you can pull the other stuff off the shelf, no problem. You'll get exactly what they're giving you. But if you're a Fortune 50 company or you're one of the world's top banks or one of the world's asset management companies, you're going to want to have some ability to flex inside the chain. Now, your founder, Gun, told me they're not called subnets anymore. So what are they called now, John?
They're called L1s because subnet's a misnomer. You're not subordinated to any other net. It's a network of chains. They all tether together if you want it to be, or you can block it from being tethered to others. It really is your own L1 that you can customize for your own purposes.
Okay, so let me take that a step further. Custom gas, custom VM, right? It could be EVM, WASM, right? It could be Rust. It could be anything. You've got your own compliance controls. So think about how important that would be to a money center bank to have that, right? And then you've got you have the capability for horizontal scaling without stressing the main chain, right? When you do these L1s that John's talking about. But listen, there's a reason why JP Morgan's involved, Wisdom Tree, Citibank, are now called Citigroup or just Citi, whatever they want to call themselves. But the point I'm making is that a old fart like me somewhere who's got an answer to a board, this is a chain that large-scale corporations are going to adopt and embrace. And it's look, it's a fast chain, and you can get a lot of throughput through it. And this is coming. And listen, whether you like Donald Trump or dislike him, and I've shared my views of him, they've got pro-crypto policies. And Paul Atkins, I think, John, you may remember this. He came to my event in Wyoming. He's the acting SEC chair. I know Paul a long time. He was with me on the Romney campaign 12 years ago, 13 years ago. He also came to Crypto Bahamas. Raise your hand if you were at Crypto Bahamas. Anybody remember Crypto Bahamas? Who wasn't?
Yeah. Mm-hmm.
Okay, so that was a killer event that I did with Sam, but Paul Atkins was there. I took Paul Atkins to dinner with a whole group of those luminaries that were there, and he said something last week. I can't believe what he said last week and how we're not like shooting fireworks off in all the major cities. He basically said the whole financial services industry and all the transactions there too are going on chain. Did everybody hear that?
That was unbelievable.
Hello,
totally under the radar.
Did anybody hear that? What the hell's going on? We should have had fireworks going off.
But we didn't. It's an amazing thing.
Think about the opportunity for Avalanche getting its requisite share in an environment like that.
I would also say that not only are we set up from a technology perspective to service Wall Street or financial services well and tokenize everything for them and rewire their underlying guts, but we are also built with that mission from day one. There are a lot of other L1s now who are trying to take over some of that narrative, but we have a track record of doing it and working with these companies. So we have a BD team that understands Wall Street and understands what enterprise grade level blockchains are really about. They're a lot different from two smart developers trying to create a small L1 for the crypto native. So we have that edge as well. And we really look forward to this next phase of commercialization of blockchain and crypto.
I just want to harken back to a point that you made on SEC Chairman Paul Atkins. So you spoke to his comments, and I kind of want to dive a bit further into this conversation and get into Project Crypto. I'm curious, how do you think about Project Crypto impacting the ways in which the U.S. will attract talent and ultimately businesses onshore?
Well, it's early. I could say stupendously great things about it, but I want to be cautiously optimistic because what I'm always worried about is the partisan mechanisms in Washington creating partisan regulation. So if you're telling me 3 years from now, a Democrat's going to come to power and they're going to try to reverse everything that the Trump administration just did to make forward progress in crypto, and we're going to be in a hellstorm fighting them every step of the way, nonsensically, it's going to be very hard. And I just want to go back a second before I go forward. We were told, no, you got to put cash into the Bitcoin cash spot ETF. And then when you sell it, you got to take cash out of it. We couldn't take our Bitcoin and put it in and take our Bitcoin out. Okay. By the way, you can have an Ethereum ETF or a Solana or Avalanche. Eventually we'll have an ETF. No staking. Can't have staking. Okay. Now we had to switch and transfer all of that. None of it would. There were no reasons why we couldn't do that, Kelvin, other than the fact that you had assholes at the SEC that basically just didn't want us to do it, right? The other problem right now is you got the stablecoin legislation passed, but the American Banking Association came in with their big feet. They big-footed us on a few things. You can't get any yield on the stablecoins. It's the same sort of nonsense that goes on in Washington. So if you tell me that we can keep this forward progress up, and you tell me that, and mostly young Democrats see this going in the way it should go, then I'll tell you we're going to have unbelievable growth in the country. We're going to catch up to other regulators around the world, and the U.S. is going to maintain its mantle of financial services leadership over the back half of this century. But if you're telling me we're going to have a yin and yang approach to regulation, and the pendulum's going to swing back and forth, it's going to be very hard on the country. And before you ask another question, I just want to finish with this thought. David Sachs understands this better than anybody that I've met so far. And Sachs is working every day on how to make crypto regulation post-partisan. Okay, I don't think we have a debate on whether or not we need oil in our strategic reserve. Well, the left wants it and the right doesn't. Same with rare earth minerals, same with surgical material, medical equipment, pandemic supplies. We have 28 things in our reserve in categories. You could look it up on ChatGPT. It lists all the different things that we think are primary assets that the United States needs to have to protect its economy. So I believe Bitcoin needs to be part of that. And, a lot of people don't understand it. Rachel Maddow said that Bitcoin is like a beanie baby. And so could you imagine the president saying, we're going to put beanie babies in our reserve? And I'm like looking at her saying, all right, she really doesn't understand this. She doesn't understand what's going on in the world. She doesn't understand the fiat currency crisis, et cetera. So again, I'm probably being long-winded, but I just want you to know that the goal here is to make crypto nonpartisan. You want to make crypto great again? Great. You want to make it bicameral, bipartisan, and eventually nonpartisan.
And we're getting there. We're getting closer to it.
We are. I know you guys have done a great job on that. You guys are working on that in Washington. Brian Armstrong's team has done a great job on that. There's many players that are in there that are trying to influence both sides.
And I appreciate the granularity you provided there. So no need to apologize. So you touched on the Genius Act. Now also looking a bit forward again, I kind of want to talk about the Clarity Act. At this point, it seems like there's nothing holding the bill out. I mean, we're approaching the holidays, so not expecting much to get done then. But how do you think that'll impact the way crypto markets operate in the United States once you do have that clarity written into law?
So that could be the most positive thing. That would probably be the game changer. So I understand why we've had a correction. Let me set this table for you. We're getting our asses kicked regulatorily. The Gensler regime alongside Elizabeth Warren, ridiculous. I had a meeting. I don't think anybody from Avalanche was there, but I had a meeting at the White House in July of 2024. It was Mark Cuban. I think Garlinghouse was there from Ripple, Mike Novogratz. We were talking to the deputy chief of staff in the Biden administration about the bludgeoning that we were getting and, this choke point 2.0 and the whole thing. And her eyes were like glazed over. And Senator Gillibrand was there. I think you guys know her. She's the junior senator from New York. She's very pro-crypto. She spoke at the Solana conference in Manhattan 6 months ago. But anyway, we're there talking, and I walked out of there. I turned to Novogratz and Cuban. I said, we are absolutely nowhere with these people. This is not going to happen, okay? And so now you're talking about the Clarity Act, right? And you know that it's creating a transparent network is the goal of the Clarity Act, right? And it's also the goal is to make sure that we have full capability in our industry to innovate. So if John Wu is tokenizing the Skybridge fund, okay, and there's $300 million in that fund, I can get that now on everybody's platform. Eventually, I'll get that on everybody's phone if they want it, okay, because it meets all the minimum threshold requirements for the SEC. And we'll be able to transact more or less instantaneously with great finality as a result of the Clarity Act. And so the Clarity Act means that you're going to have your Avalanche at JP Morgan. You can store it there. PNC, I don't know if you guys saw this week, PNC has said that you can buy Bitcoin through them and you could store it there. Okay, it's the first big money center bank to make this proclamation, and they've gotten more or less clearance from the SEC. With the Clarity Act, any fence sitters that are worried about regulation, uncertainty of regulation, there it is. Now, if you tell me the Democrats take the Congress and they want to repeal the Clarity Act, I'll tell you that's about as difficult as the Republicans taking the Congress and trying to repeal Obamacare. They can chip away at it if they want, but they're never going to be able to totally eradicated. So this is a major milestone for us, okay? And the way I would want you to think about it is there are innovations that Avalanche right now, and John could probably talk about this better than me, is sitting on. And they are being told by customers, or they're being told by potential users, well, we got to wait for the Clarity Act before we put that in place.
That's exactly right.
And
that's putting some stuff on hold before we really lift off.
Yeah. So that's what I see. And by the way, that will be monumental, because just think of asset on chain, TVL growth of Avalanche, who has, I think, the leg up in the Fortune 50, the Fortune 100. So, and by the way, they've also got the leg up on tokenizing funds. And I again, just take a moment.
It wasn't hypothetical. We are actually tokenizing a Skybridge fund.
Well, you did my fund, right? So just think about this. Think about the flywheel. Think about the positive flywheel. Hello, hedge fund manager. How are you? I'm great. I'm going to tokenize your fund. Okay, that's great. What stocks do you own in the fund? Oh, here are the stocks I own in the fund. Okay, I'm going to go to those CEOs and CFOs and tokenize those stocks as well. Okay, and then think about the flywheel that takes place for Avalanche as these things get tokenized. So the Clarity Act is a game changer. Like, honestly, I have been pushed back for 5 years. So I go in to see somebody, I go to see a big institution, I got to take my money from you, Anthony. You do? Yes, you own crypto, you own Avalanche, you own Bitcoin, you own Solana. Oh, okay, but look at what they've done. Yeah, no, I can't, because I can't go to my board and tell them I'm in this stuff. They don't understand it. The rise of the DATs, don't underestimate the rise of the DATs. Go look up on your phone somewhere how much Strategy, formerly known as MicroStrategy, Van Eck owned before they made the decision 10 days ago to come into the Bitcoin pool. And so I can't own Avalanche, but they might be able to own AVAX 1, right? I can't own Bitcoin, but they may be able to own Strategy. And so this whole thing is crazy. Okay, if you came to me to buy Bitcoin in 2020, I had to say, Kelvin, Steven, listen, we're going to create a limited partnership vehicle, and it's going to be a fund dedicated to buying one asset. You're going to be an LP in that vehicle. You're going to get a K1 from me. Unfortunately, because of the SEC, there's liquidity constraints. I can't let you out. It's got to have 90-day redemptions, right? Or we could have set it up the way Barry did, where we're charging you 2% and you're in a closed-end fund that's likely going to trade at a discount for most of the time. Some of the time it traded at a premium. I'm just saying, you have to think about where we were and where we're going. We're going to a place where Avalanche is going to tokenize a company like Starbucks. And I'm going to walk into the Starbucks at the Galleria Mall here on Al Marian Island in Abu Dhabi, and maybe they want to buy back shares. Maybe the CFO has a loyalty thing going on. Maybe there's a share repurchase. And they say to me, look, we're going to give you your coffee, but we'll give you a 25% discount if we can lift some Starbucks stock off your phone, okay, because we're in a share buyback right now. Or maybe I'm going to walk into Walmart and there's going to be a stablecoin, US dollar denominated stablecoin that Walmart has picked up. And it's tokenized on the rail system known as Avalanche. And I'm going to the cashier and they say, hey, listen, don't pay with your MasterCard or Visa. We'll give you a 3% discount or a 2% discount if you pay with our stablecoin. Okay, all of that is coming with the Clarity Act. And we have that technology now, This is worse than the Uber experience. If you remember Uber, your city that you live in, your state did not want Uber. Or the mayor didn't want Uber, the taxi commission didn't want Uber, the administration didn't want Uber. But who wanted Uber? The people. The people wanted Uber. And I submit to everybody listening, if the technology is better than what we have, the first move is everyone poo-poos it, doesn't want it. And then the second move is, holy shit, it's going to happen one way or another. And so we have technology. Avalanche is a technology that is better than what we have now. And so it will get adopted and it will get used.
Yep. 100% agreed on that one.
You touched on a lot of really key points in this episode. I know we wanted to dive a bit deeper into, but one of which I think we should address was the last thing you said on the topic of stablecoins. With respect to the real world utility of crypto, I'm curious if you get deeper into how you see stablecoins disrupting traditional payments companies in the future.
I think it's going to change. And I want to use an example, an analogy, if you don't mind. I want you to think of the phone company. You guys are younger than me, but when I was in college in the mid 80s, I had to go buy a phone card from the post office in Rome or the post office in London. And the card entitled me to 15 minutes of conversation with my parents. And it was maybe $3 a minute. And so for $45, I had this card, and then the AT&T operator would say, the card is down to 3 minutes. The card is down to 2 minutes. And so it cost me $45 to have a 15-minute phone call. Okay, today I can log on to any cafe in any of these major cities and have a costless phone call. The phone company didn't go out of business. They figured out a way to create other services around communication, maybe the broadband output, et cetera. And I think that's what's going to happen with there'll be custody, there'll be servicing, there'll be experiences. The credit card companies are already moving in that direction. You want my card because I've got the best airport lounge at LaGuardia or JFK. You want my card because you'll be on the 55th floor in a bar overlooking the most gorgeous building in the world ever, the Chrysler Building, while you're having your Don Julio 42 with ice. Okay? And they're going to change their ways of doing business. They may get into more consultancy. They may get into more travel experiences. They may team up with hotels. They may be doing junkets or trips. They may have branded events, or they bring up Bruno Mars or Bruce Springsteen. I don't think they're going out of business. Is the pricing going to change? Yes, it will. But the pricing changed on the credit card. I'm sorry, the pricing changed on the phone companies. But those phone cards were thrown out. You got to think about you got to force all the neuroplasticity of your brain to think about the future differently than today. And I'm going to take you guys back. You are old enough to remember 1998. I'm looking at the faces. Maybe Gates isn't. How old are you, Gates?
30.
All right. So
Yeah, I was going to say, I was probably 2 years old. So,
all right. So these
I
two
can't
guys
recall
will
much.
remember 98. How old were you, Wu, in 98?
I'm going to decline to answer that, Anthony.
Or he's going to decline to answer that. See, he's aging like an Asian woman. See, he's not going to answer the question. See? All right. So, but I'm going to take you back to 98. I had a fat box computer. And I had a dial-up modem underneath the computer, and it beep, 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 and then it clicked in. And if I was lucky, guys, it took 3.5 minutes to get my landing page, which was AOL, to download on the computer. Then I was able to click on an email and return an email, maybe go into one of their chat rooms. And if I was super sophisticated, I bought a book from Amazon in 1998, or I bought a Pez gun from eBay. That was my level of internet sophistication. And there were critics writing about the internet saying, this is ridiculous. It's clunky. It's slow. It's not going to transform anything. It may be a good phone directory. You guys don't remember this, but you used to pick up a hardline phone and call 411. And you'd ask for, Kelvin's Pizza or John's Deli or Stephen's Bowling Alley. And then the operator would give you the phone number. And they would charge you 10 cents for that. Okay, so that was, and you could go to Yahoo and get that number, and you didn't have to charge any cents. So that's where we were. Now it's 27 years later. What if I came in from outer space or through the time machine? I was with Doc in the DeLorean, came out of the DeLorean, said, guys, I'm from the year 2025. You see this clunky machinery known as the internet? Well, in 25 short years, you're going to have broadband. You're going to have the introduction of Wi-Fi in 5 or 6, 7 years from now. And before you know it, you're going to be streaming alongside of billions of people 4K video. It's going to transform Hollywood. It's going to transform the way we take in entertainment. Moreover, that company called Amazon, which was selling books in 1998, is selling everything now, every SKU in the world, and it's 57% of the internet sales and 5% of all retail in the United States. And the son of a bitch that started is shooting himself up into outer space in his own rocket. Okay, and he's floating around in the Mediterranean in a 500-foot yacht. Oh, and by the way, there are trillions of dollars of business. And last but not least, this George Jetson phone call that we're doing right now could not be done in 1998. All of that efficiency is here. So you're in 1998 for crypto. So yeah, I listen. Oh, the use cases aren't there. This isn't there. That isn't there. Quantum computing. Okay, quantum computing is going to break everybody. Okay, if we don't create quantum resistant structures, you think it's crypto's the only thing going down? You don't think the local bank is less secure than Avalanche? Of course it is. So I want you to think about the future by drawing a line back to the past. Take a look at where we were in 98. Go watch a movie from 30 or 40 years ago and look at where we are today and where the world is transformed. And you just have to imagine that's going to be exponentially better because of all the compounding growth and now with the introduction of AI to help us out.
If you look at the users on the internet back in the late 90s and then really using crypto, the numbers are very similar. So when you make the analog to 1998, it's actually very, very good in terms of the usage and adoption.
And Anthony, I think you've got certainly a clear and concrete vision for where the future is going. In this new world of tokenization, this convergence of Wall Street coming on chain, as well as plenty of other assets, especially with stablecoins leading the charge, where does DeFi fit in? Do you think DeFi has a place in the interesting open source technology that's been built?
Where do you think, Stephen, if you don't mind me pushing it back to you? Like, you asked the question for a reason. I mean, I have my thoughts, but I want to hear yours first, if you don't mind. Where do you think?
My perspective is I'm a DeFi founder, right? So I'm at the absolute bleeding edge, and the trends that I see are absolutely tokenized stock, private credit, RWAs, et cetera. All this is coming in, and it's about to come in really hot with the SEC and kind of the administration that we have, Clarity Act, et cetera. So I think broader acceptance of digital assets as collateral is definitely, that's the trend that we've been talking about so far. And then the usage of these assets, because like you said, like blockchain is a brand new technology. It's a technology upgrade. It's the iPhone moment for these financial systems where it can do everything that you have done, which is transact and settle payments, but now better, and opens up net new utilities. So when I look at things like perps, interest rate swaps, AMMs, borrow lend protocols, decentralized borrow lend protocols, to me, my mind starts opening up all sorts of different possibilities where now you have crypto has always had a problem of low quality collateral, low quality assets. And then now you're bringing on the highest quality assets in the entire world. So to me, it seems like there's a connection here that's just about to happen. But with this backdrop of exactly, I like that you focused on creating, I think the word you used was nonpartisan. So making sure the Clarity Act is nonpartisan. And it seems like that's probably the biggest existential threat to utilizing blockchain in brand new ways if things swing in a certain direction because the winds have changed with a different administration, et cetera.
So, I mean, I agree with all that. Let me just add a few things then, okay, and get your reaction or Kelvin and John's reaction. What about all the things in our world that it's illiquid? And I don't know the number. We could probably chat GPT this, but I saw something, and don't quote me on this number. It's only 37 or so % of the assets that we have are actually liquid. You know, they're stocks, bonds, money market accounts, stable coins would be definitionally liquid. Crypto's liquid. It's a $2 trillion, a Bitcoin, $4 trillion roughly in the overall market. Most of the things that we own, the hotel I'm in, your house, a piece of art, a used car, new car, they're illiquid assets. And so don't you think that this will help liquefy and make easier and more accessible those assets to people? The same way we did a mutual fund, which was a great idea in the 1940s or 50s. We have a mutual fund. And then A.W. Jones came up with a great idea to have a hedge fund where we could have a mutuality of interest. We put everything in the same fund. Can't we have a mutual fund for real estate that's liquid and it trades because we've got it on a rail system of Avalanche and we know that we have a whole documented ledger that we can keep track of all this stuff with? I don't know.
We know the big asset managers like Apollo, Blackstone, and KKR all trying to structure things to access the accredited investor for now, because they're all tapped out with servicing the sovereigns, the pensions, and they're just jumping, and the endowments, they're just jumping over each other there. So it's about structuring the right thing. And I do think that it is possible to have a DeFi world, but there will be two worlds. There's no reason why there will be more of a DIY in the DeFi world for different risk reward parameters versus a more white glove traditional world. Just like you were talking about loyalty points and credit cards, the stuff you mentioned are very specific. I know exactly what card that is. I don't know if the average person is willing to pay for that card to get those services or have the ability to get that card. But there will be other royalty availability for the more the mass.
In addition to what John's saying, that I think credit card companies will exist because there will be tiered income and people will want consumer finance loans and they'll take them from credit cards because they're easy. But what if John Woo invented a 6% credit card and it was on Avalanche's rail system, and so that he's made it? Remember, the credit card, if you're in a brick and mortar bank, it's expensive. You got brick and mortar people sitting in the bank. You got to heat the bank. You got to cool the bank off in the summer. Well, you have no bank, right? Like Chime is a neobank. But what if you create a neo credit card where it's hooked up to Avalanche, so the costs are de minimis to administer, and a result of which, instead of a 14, 18, 19% racket, you're charging 6 or 7%. You see, I'm old enough to remember when they deregulated Wall Street. Okay, none of you were born. Okay, it was May 1st, 1975. Okay, 50 years ago, we were on regulated rack rate commissions, guys, from the 1929 crash. If you went to Morgan Stanley and bought IBM, you paid the exact same commission at Merrill Lynch and the same one at Goldman Sachs, et cetera. In 1975, it was called Mayday, and they blew up that commission structure. A gentleman by the name of Charles Schwab said, I'm leaving my bank, and I'm going to cut the prices on these commissions. I'm going to use this new computational technology known as mainframe computers. Instead of charging you $1 a share, as ridiculous as that sounds, I'm going to charge you 40 cents a share. And then it went to 30 cents a share. And then by the time I got to Wall Street, it was 6 cents a share on the institutional side. And now it's no cents a share at places like Robinhood, right? I mean, you're the data machine that they're using, and they're selling your order book, but you get the point that I'm making. You mean to tell me with the introduction of the Clarity Act and places like Avalanche who can help to create companies, there won't be a credit card out there that's going to be at 6-7% as opposed to 17%? That's the world that we're heading towards. So people could pretend otherwise. They could write about the FUD. They could say Avalanche was 55 or it was. Now it's whatever it is now. I mean, there are two types of tombstones. The one you get from the bank to celebrate a deal, and the one that they chisel your name in when you're dead, okay? So they can chisel the name of the different cryptos into the tombstone in the graveyard, but they're not going anywhere. These are very successful, versatile technologies. And I think people need to step back and think about the use cases.
It's very, very eloquent. And it's funny, I'll be like the resident doomer for the time being, just for argument's sake. I find it interesting when you talk about what that future vision looks like and where we're headed. It's abundantly clear to me as like a crypto native individual. But the thing that I actually tend to struggle with the on-chain finance thing is, okay, it's very clear the opportunities presented by this neo-banking opportunity, on-chain at least. So the idea that you can offer almost private wealth services to the everyday self-custodied individual, that makes sense. The thing that I struggle with is what's going to be that mass use case. We had previous cycles, people were saying, we're going to bring the next billion users on chain. And that marketing gimmick, throwing out a crazy number, kind of subsided because it was very, very tough for a lot of, we'll say, applications, even protocols to find product market fit. Now, as I look at the DeFi side of things, I think there's some very, very interesting things happening with respect to decentralized finance, on-chain finance generally. But we'll say maybe these very, very large buyers, institutions, these DATs, if you will, are only deploying money into staking. So one of the things I actually wanted to ask you directly, given you're very, very involved in the DAT world and know that extremely well, is what reassurances would a CIO or any C-suite individual need to say, okay, we understand that these yields are high. They come with the smart contract risk premium, but we feel comfortable deploying at scale into these things. And it may not have come yet, but just kind of even speculating in the future, what you think that would potentially look like.
It's such a great question. And I think you have to case by case it. And I think you have to look at like really great management teams versus, sort of going by the book management teams. And so if you take somebody like Matt, I would say to you that the goal is to use the operating income to buy accretive companies in the ecosystem that helps the overall ecosystem. So when I sit down with Matt Zhang and talk about the future, what makes his DAT have competitive advantages? Yes, as the staking, it's going to get net operating income, net revenue. So therefore, nobody can say it has no revenue or stuff like that. Number two, if it can deploy that net operating income into accretive businesses that improve the overall NAV of the company. And so if we're sitting here 5 years from now, you say, well, how much Avalanche do you own? Okay, well, that's our embedded Avalanche number. And how much net operating income are you getting from businesses that you bought? And oh, by the way, those businesses are throwing off free cash flow. How much Avalanche are you buying with the free cash flow, which is increasing the staking yield on the Avalanche? Okay, and oh, by the way, because he's a sophisticated traditional finance guy, there's things you can do in a corporate public structure in terms of the mixture of debt and equity on the capital stack that it can improve and boost the return of the equity for the shareholders, for the equity holders. Goldman Sachs is doing that. JP Morgan is doing that. Okay, there's ways to manage that float, or there's ways to arbitrage that accretion. And so, if you're in a DAT, and I think some of these DATs have struggled because guys are like, okay, this is a great copycat idea. Let me copy the idea. Okay, great. What are you going to do? Well, I got a staking yield here. We're going to sit on that. And maybe we'll pay that out in a dividend. Maybe we'll use that to buy more of what we're staking. And again, I am the contrarian here because I looked at these DATs and a lot of them have fallen. People are like, okay, the DATs are over. But I don't see that. I think the DATs are just beginning, frankly. And everything in this industry, you got to get a little bit of pain in the industry before you get the appreciation and the upside. And so same thing would be here. And again, this is my view, and I'm just going to share it with you guys. It's a market psychology view. excuse me, we're getting our heads beaten in by the Gensler Warren squad. They're no longer in existence. They have to leave. Donald Trump has come in with Paul Atkins and pro-crypto friendly people. The market zooms up, and I submit to everybody listening that the prices that the market zoomed up to last year are where prices should have been in 2022. Because if we had gotten the cash ETF pursuant to administrative law and had Gensler just done his job, the futures were approved in November. The spot or cash ETF should have been approved 3 months later. So we're in a catch-up mode. Okay, now Trump's in power. Everything should be glorious. People loaded up for bear and they levered their load. So they were levered long. Okay, and things are not moving as fast as we originally thought. If we were sitting here, and it was December 2024, we were doing this podcast, you said to me, is the stablecoin legislation going to pass next year? I would have said yes. What about the clarity and the market structure regulation? I would have said yes. We didn't get that. You know, it got slowed down. Politics, you can name 20 different reasons to shut the government down, longest shutdown, I think, in history. A lot of different reasons. And then, Trump's, you got a full-on trade war going on. People are levered. He puts out a tweet that he's going to go to war, trade war, not full kinetic war, but trade war with the Chinese. And, we blow up a market maker. We de-lever the entire industry. We drop $1 trillion in 28 days. There's going to be a healing process. But I do think because that happened, if you look at where the greed fear index is right now, people are toggled on fear. A lot of people are writing off the industry again. It's a great setup for next year.
So I guess that leads me to my next questions, and I'll give you a two-parter. Feel free to answer in whichever order you please. So what part of the cycle is this, and what can we expect, if you don't mind expounding on, in 2026?
So I don't think we're at the traditional parts of the cycle. I think the 4-year cycle will prove to be broken here. I think we just got it over euphoric after the regulatory demise of the Democrats and Gensler, and a result of which we went up a lot, and now we're resetting, and we're still waiting for pieces of legislation. So I believe that the Clarity Act will get passed in the first half of next year. I think it's important for Democrats that are pro-crypto to get it passed. They don't want to be going up against the crypto lobby coming into the midterms. They're smart people. A lot of these people got smoked in 24. Sherrod Brown lost his job, as an example, because of the crypto lobby. And so I believe we'll be sitting here this time next year. Prices will be a lot higher, and there'll be a lot of use cases. And I think John, in particular, and Avalanche are sitting on clients that want to move. And I think he's going to have a year of announcements. Maybe it won't be in the first quarter, but by the end of the year, there'll be a series of announcements of different banks, different fund managers, different private equity firms, different companies that are tokenizing their stock or tokenizing their bonds or have their fund tokenized like we just did at Skybridge. And it's going to create that positive flywheel. And so, and again, it's not going to be perfect, and it's not going to go like this. Anybody that tells you it's going to go like that doesn't know what they're talking about. And things that go like this, the last guy that said the thing went like this, he spent 150, died in jail, 158-year sentence. So it's not going to be perfect. But I do think next year for Avalanche is going to be the year of announcements born from the Clarity Act, which is going to be very beneficial to the token and the DATs associated with it.
Anthony, your knowledge also expands into the whole macro arena. Who's going to be the next Fed chair? I think everyone's telegraphing one person right now. And does that mean there's going to be a lot of increase in money supply, and it's actually good for the asset class?
So I think look, the poly market saying has it. They've been trying to walk that back recently because Trump likes drama and he wants there to be some suspense around the pick. But I believe it is going to be Hassett, because I believe staffers have been told that. And I think plans have already been made for that transition. Now, he's a great guy. Again, I've known him forever. I spoke on a panel with him at the Milken event back in February of 2024 in Singapore, before the whole thing heated up. And then we went back to Singapore again in October, where I was on the same panel with him. But I've known him forever as well. He wrote a book 25 years ago. And I would recommend that everybody reads that book. And once he becomes Fed chair, that book will be a classic. It was written by him and James Glassman. And the title of the book was Dow 40,000. Now, the Dow at that time was like 8,000. And the book caused a lot of hysteria because what he was basically saying in the book is that we were going to have this bull cycle, 25 plus year bull cycle, and that the mechanisms were in place for America to really have this, quadrupling of the Dow. And if you read the book, it provides the best insight into his monetary policy philosophy. Now, he wrote it with James K. Glassman, who was his boss at the time, but Kevin's the one that really did the work on the book. He was like the understudy for Glassman, who was Bush 1, George Herbert Walker Bush is one of his economic advisors. And believe it or not, he's still alive. He's actually helping George W. at the Presidential Library. So Hassett goes that far back with the Republicans. And I think the president trusts him, and he's a low-key guy. Warsh is a very talented, very smart guy. I predict he will one day be a Fed chair. But he's too good looking for Trump. Okay, I'm just letting you know how it works. Okay, he wouldn't want the attention on Warsh, and Kevin is like way more low key, and for those reasons, I think he's going to get it. I'd be surprised at this point if he doesn't get it based on what I've learned. But if you read that book, it'll teach you about his monetary policy. And yes, it's not. See, here's the problem: he's pro low rates, but he was pro low rates before he went to go work for Trump. So that's another positive, and it's another reason why I think he's going to be the guy. By the way, I think the market will respond favorably to him. I don't think he's pro low rates, where if we have 7% inflation, he's going to take the rates to zero. He's not stupid. He's a very talented, very capable guy, and he'll do a good job. And he'll be good for your bags.
Well, I mean, if we want to end on a high note, that definitely sounds like one.
That's what I'm trying to give it to you straight, Kelvin.
Hey, look, I'm very, very grateful for it. As a New Yorker, definitely appreciate that. But we are at the top of the hour. So okay. I think that's probably an ideal stopping place, unless I'm not sure, Steve and John, you want to do like a quick round robin rapid fire, but just want to be mindful of Anthony's time.
No, I think that was great. I think Anthony hit on some very key points. There's going to be more clarity and regulation. The macro environment seems like it's going to be better going forward. And there's going to be a lot of what I call distribution with new RIA channels and other people adopting the space. And just from my perspective as an operator, I can tell you the prediction Anthony made about there's a slew of potential Wall Street type TradFi or enterprises that are ready to jump into the space, especially on Avalanche, is absolutely correct. We just need a little more clarity.
And for me, the big takeaway is hearing your well-earned perspective around these technology shifts that happen in the world, where blockchain as a financial system is like the internet improving from the dial-up days. And I think when you zoom out and look that way, then there's all the nooks and crannies of opportunities that come up, because all those people that have hair on fire, they've all got problems that need to get solved. And that all those problems that surface is where the opportunity is.
Yep. All set. Anthony, thank you for taking time out of your day and just gracing us with your very, very thoughtful insights. This was the Layer One podcast.
Just make sure I get the introduction, this very glowing, flattering introduction that Wu gave me in the beginning, so I can play it every time I come into the house. My wife sees me, I'm going to play Wu's introduction.
Let me introduce you at the next SALT conference as well, Anthony.
All right, that's a deal. All right, guys, great to be on with you guys.
Thank you.
All right, it's great,
and
Nico.
Frank says he had a question. One, why you writing so many damn books? His words, not mine. And then two, that was almost like karma for the pizza thing when you guys were recording last time. He had to stop the podcast to go get his stuff. The door rang this time. So just want to say that before we ended.
I do remember that. That was funny. I was giving him a lot of shit for that. Hey, man, I got to look good in Brioni tomorrow, brother.
Hey, I get it, man.
You always look good. Thank you very much.
Cheers.
Good to see all of you guys. John, thank you, man. Let's get together, all right?
We'll love that when you come back. Take care. Bye-bye.